gold really did its job last year. This was a time when it was a bad time to speculate. 2022 was not a good time to be a speculator, and so gold did absolutely nothing. And for some reason, that's something people are not happy with. So I feel like gold is so sensible as part of your asset base if you're wealthy. I mean, if you're speculating and if you're trying to get started in life, then I think something like a royalty company like Metalla is how you really boost things. Because if gold goes up, then the royalty company should go up more, right? Because it has exposure to future production. But gold is not really like that. It doesn't shoot higher. You're not going to wake up tomorrow and gold's like $9,000. It's not going to happen, and you're not going to be swapping it for loaves of bread. It's kind of crazy to think that, but it's rock solid. If you're already rich, there's a rule, Elijah. There's a rule in life, and the rule is that you only have to get rich one time. After you do that, you have to stay rich. It's very hard for people. It's really, really hard. And so gold last year, if you were rich, you stayed rich. But back to your first couple weeks of the year, it's very important. Typically, it comes out of a cannon. The gold stocks and the gold price have a strong showing in the first half of the first quarter that runs through about Valentine's Day. I don't actually know why this is the case. I think part of it is due to Chinese New Year type influences in the market. I think part of it is due to recalibration of portfolios that happens first of the year. I know for Metalla, we'll talk to funds a lot of times, and they don't want to do something in December. That's a time when everybody's taking tax losses and all these things. So I think that has something to do with it as well. I mean, you can see that these stocks related to the gold business did not do very well in December, and I think that that's a part of it. So I don't think we really need to know why. I don't think it matters. I think that, but if it's a time when you're positioned, I think you're pretty pleased in the beginning of the year, and it's shaping up that way now. We can talk about that more if you'd like.
Definitely. I know last year we saw this, and with the start of the Russia-Ukraine war, we also saw gold pretty much hit the same high it did back in 2020. So do you anticipate gold making a new high this year above that 2070, 2080 level?
I know this is going to sound crazy, but I believe that the gold price is the tail wags the dog. And what I mean by that is that the futures market determines the spot price. And it's almost the equivalent of if you were a corn farmer and you're producing corn, but someone in New York at the mercantile exchange is setting the price of corn based on the futures market, meaning if the price of corn goes higher than they want it to go, then they can sell millions and millions of bushels of corn that are not actually corn. All they are is future agreements to produce hypothetical corn. And you do that with leverage. And for instance, in the gold market, many times you can sell an ounce of gold on the futures market for $60. And you can do the same on the other side. You can buy an ounce of gold for $60. And people say, wait a minute, I want to buy an ounce of gold for $60. But you're not actually getting an ounce of gold. You're getting the future commitment for an ounce of gold from some unknown seller of that future commitment. And when the Ukraine thing happened last year, gold shot to like 2080 or something like that, 2083. I was watching that happen. I remember I was up most of the night when that was happening. It's about February. And what we saw going on, this is the screen here behind me. This is all the major metals. What we saw going on was we saw 41 million ounces of gold in one session trade in the futures market. And that's approximately 1 year of gold production. And so people say, well, you can't be serious that, Newmont and Barrick are selling their entire, no, of course they're not doing that, because you can't really do that. And so what I want people to understand is that this is not a conspiracy. Okay. I don't believe in conspiracies. What happens is, and I watched this for 20 years now, is that the price seems to be controlled by the futures market and not by the spot market, meaning not by buyers and sellers, not by producers and users, okay? It's controlled by the futures market. So that being said, today I see the price at 1850. That's where the price was last June. And what I've noticed is that the price tends to go to a certain level and then trade around that level until the futures contract changes to the next date. So my suspicion is maybe it's 1850, maybe it's 1875. That might be where we trade here for a little bit. And then when that becomes hard to defend, it goes to the next area. Okay. And so my guess is that is going to become increasingly hard to defend, and probably we go up into the 2000s this year. I think that the gold industry, production side of the industry, is struggling. Of course, as you know, I'm extremely connected to the royalty business. There have been 9 takeovers, 9 acquisitions, mergers, or takeovers, 9 in the small royalty company sector. Now, that's a frenzy. If any other industry, if you were talking about the car wash industry and the bulk of the companies have been acquired, that would be pick up Investors Business Daily and there'd be an article about it. But in the gold business, nobody's talking about it. And so I can tell you that same thing's happening in the major mining companies. Barrick and Newmont and Agnico have been aggressive acquirers of mid-tier companies. There are not many left. Okay, so what that tells you is that the production profile of the gold industry, these are the guys that are blasting and digging and driving the truck out of the mine with the ore and all this stuff, as you know, these people are having an increasingly difficult time identifying large, new, feasible supplies of gold. And so I know if you're watching this and your day job is that you're off to the factory or something, don't be discouraged. This is actually extremely simple. So the companies have not invested for a long time in new gold mines, and the gold mines have a finite supply. So you're running short. Okay, so what happens when you start having less, of a product? The price goes up. That's the deal. And so my point is that the New York futures market keeps the price pegged somewhere, okay? But the actual production of gold is struggling to grow. So those are your two. That's your Star Wars battle royale, okay? And so I think this year you're going to see that pressure grow to the point where probably you need to have a new high in gold. I think it's a year we could see gold up 20% very easily, and that would put it into a new high, and it might overshoot from there. A lot of times it goes a little too much, and then it has to calm down. But this is the year for that. I really think this is the year for that.